everyone. Welcome to this small short webinar on Opstra analytics platform. So this is a webinar to present the various features of Opstra. Of course, we have lots of videos on YouTube, but we will take you through all the features individually. I have with me Krishna, who's also from Definedge support, and he'll be explaining all the individual features of Opstra. And after that, I will be explaining a couple of strategies which you can use looking at some features of Opstra, which is mainly the TOI, which is called total open interest, and how it works and how you can trade based on that. So welcome, Krishna. Now I'll hand it over to Krishna to explain Opstra. Before that, I would just like to mention that there are some people who are getting confused because we had Opstra at opstra.definedge.com, which has been there for the last 3-4 years. And recently, Definedge also launched Securities, the brokerage platform. So now we also have opstra.definedgesecurities.com. And the subscription charges for Opstra in Securities is much lower than what it is in opstra.definedge.com. So of course, Krishna will explain all that and also take you through all the features. In fact, all the features which are present in the old Opstra are also there in the new Opstra. So there is no difference in the two. It is just that in the new Opstra, it is a trading terminal in itself. And once you have an account with Definedge Securities, you can trade from this platform directly. So welcome Krishna, and over to him.
Hello everyone, this is Krishna from Definedge support. So we'll look into some features for Opstra now. As we all know, we have two versions of Opstra. The existing one, which is purely an analytical tool, and the second one we know is a trading terminal along with it. So in that, along with the old features, we have added trading facilities from there. So let's see about the new Opstra, this trading terminal. So yeah, as we can see, these are the tabs which are available in our existing Opstra as well. So the new thing we can see here is in strategy builder. So let's go to strategy builder first. Here what we can do is we can create our strategy like we regularly used to do in our existing Opstra. So let's take for an example here. Let's create a strategy, say for iron fly, for example, and we can select the expiry from here. As we know, we'll just add it and we get the payoff chart. This is the standard procedure we used to follow, and then we used to just save it to the paper portfolio, right? But here, along with the saving feature, we have this new button right here, the execute strategy button. So once you click on this execute strategy, this will just give you the live bid ask for all of the legs you have selected. So these 4 legs we got here, and their live bid ask will be updating here real time along with the details mentioned on the left hand side. So here we can place orders. We have 2 methods to place the orders. One of them is this, place all orders at market. What will this one do is you will click on this button and it will place all of the orders mentioned here, like 4 of those on market price. Or if we want to execute them individually on limit price, so that we can do here as well. Say limit, place order, limit, place order. This also can be done here really fast. So this is a convenient way to place your strategies, place combined orders of your strategies from a single screen. Here we can just change the price, add the quantity, we can add the lots, subtract them, like reduce them, and whatever it is, we can do it right from this screen only. Okay, so once we execute this strategy, obviously we get it into orders. All of the orders we have placed here with the categories being pending, completed, rejected, and all. Once the order is executed, the position is active. Then we can see it under positions. Here we get the list of all of the positions we have open in our account. So here you get the list of all of the positions. Among that list, the case can be you have multiple strategies open at your end. Say for example, you are going with a condor, as well as consistently you are also going with some long options intraday wise, or some positional trade, or some mixed kind of trades if you have. So you can categorize them as well and put it here under strategies. So into strategies you can see the categorical view. Say for example, if you have one positional strategy, You can categorize it here. Along with it, you can create a second category of your, say, any intraday position you have. So this is the strategy view and this is the position view we get. Second, let's go through.
So there's no need to wait. You can ask any questions.
Right. Okay. So these are the new features we saw. Along with that, let's briefly go into some introduction for the features we have in Opstra. Like for example, let's go with futures first. Here we get futures dashboard in which we can see all of the top price gainers, losers, OI gainers, OI losers, and in a nutshell, we can also see the top build-ups that are happening in the futures right here, along with volume buzzers and IV gainers and losers. So this gets updated every 1 minute. So a new thing we have added in Opstra for securities is this thing, the watch list kind of thing for two benchmarks. We say Nifty and Bank Nifty at the top, which gets updated real time. So we can see this as well. Along with that, we have futures open interest, where we see the open interest for futures for all the three active contracts. If we want to see it combined, we can see it in combined mode. Or if we are interested to look at each one of them individually, we can do that by selecting the contract as well. It gives you a futures chart along with the volume chart as well as open interest chart. And if we go with any other stock, say for example, let's take Reliance, and for that, we can also see cash delivery percentage at the bottom, along with volume and open interest. As in Nifty Bank Nifty, there is no cash delivery. So in stocks, we give this as a additional feature. So next, we can see this in intraday mode as well. Here we can see we have the 5-minute data for PCR and open interest for futures. This gives you by default the current futures ka data, along with the max pain as well as PCR value and its line chart on the intraday time frame. And you can just see, as we have max pain, price, modified max pain, and PCR, all of it in a single chart. So if we do not want to see max pain or modified max pain, we'll just hide it out, or we can just toggle it whenever we want. Max pain you want to see, PCR you don't want to see, then you can just toggle it out accordingly, and you can see it that way. Next, we can go with build up. Futures build up. Here we have all of the futures scripts listed in a table where we can see 1 day price change as well as 1 day OI change, along with 5-day price change and its OI change. So 1 day price change and OI change, we considered it as a short-term outlook, as it is a single day change, and 5-day price change and OI change are considered as medium term outlook. In a way, it is a weekly view, we can say. So it gives you the build up according to that change in percentages for price and OI. So a 1 day price change is mandatory to qualify for any build up, and 3% of OI change is mandatory to qualify for a build up in 1 day 1 day outlook. That is a short term outlook. But in the medium term outlook, that is a 5-day wala outlook, the price change has to be at least 2% and the OI change has to be at least 5%. We have also mentioned these details here. As we can see, 1% and 3% for short term, 5% and 2% for medium term. So along with this tabular view, we have this bubble chart view as well. Here we can see all of those in a bubble view. So in a single chart, a single quadrant wise view, we can see which stock is performing in the terms of its price as well as OI. Here we have filters as well. If you need to see OI change of more than 2% only, you can just click on this button and it will just filter out for you. And along with it, you want to see the price change as well, you can just filter it out that way. And the bigger the bubble, the bigger the volume percentage. So next we have is the advanced decline ratio. For that, the same data, it comes up in the pie chart view. So here we can see what exactly is happening in the market in a single pie chart. How much buildup is happening in shorts, how much is it going in longs. So that way, in a single screen, we can see the overview. Next we get is a heat map, which we all might have seen till this point. This gives you the heat map of all of the stocks of Nifty here and Bank Nifty, along with all of the stocks in F&O. So we can see it in market cap weighted or equal weighted as well. So if you click on equal weighted, it will just sort it out according to the price change and it will give out the result that way. And the second thing next thing we have very useful is the sector heat map. Here you can see the sector wise data, like which sector is performing how. And if you want to see the details, which stock is performing in that sector, you can just click on that sector and you get the view for that. If you want to come out, we can just click this button and we can switch to another sector. Okay, which sector is performing and in that sector, which script is exactly performing how. So this is the sectoral view. Next we can see is moving averages. Here we get the bars for commonly used moving averages, that is 20 MA, 50 MA, 100 MA and 200 MA, which can be seen in simple moving average form as well as in exponential form. So we can also sort it out by seeing the current position key, where exactly is it standing between now, as we can see, it is about 200 EMA but below 100 EMA. So among these, we can see we have next feature as MWPL. Here we can see which stocks are under ban, FNO ban. So as we all know, FNO ban is decided upon the MWPL, market wide position limit, over the open interest values that are been decided by the exchange, combined in all of the exchanges. So here we can see if the stocks open interest, or we can say percentage of MWPL, rises above 95, then it goes in FNO ban for the next day. So as we see, IBOL Housing Finance is under FNO ban since yesterday, I believe, and it will only get out of ban after it has gone below 80%. The entry criteria is above 90% and the exit criteria is below 80%. So among these features, mostly all of them are available in the basic plan as well, excluding this intraday wala feature, which is for a premium, which comes under premium plan only. Baki rest of them are available in basic plan as well with a 15-minute data. So next we see is options backtesting. In options backtesting, we can backtest the predefined strategies on end of the day time frame. So let's take an example here. We select the backtesting method. We select the strategy. Say for example, short triangle. We go with Nifty, Bank Nifty, or any ticker we want. We can select the backtesting period. In this, we have data since 2016 on EOD basis. So we can go with monthly as well as weekly. So you just mention the exit and entry criteria here. How many days before you want to enter the trade? How many days before exit you want to how many days before expiry you want to exit the trade? What you want to keep a stop loss at, target at, and the delta values for the strikes you want to enter. And you can just click on start backtesting and it will just give you the whole summary of all of the trades taken according to the entry and exit criteria as we mentioned in the mentioned time frame, that is last 1 year for the monthly expiries. So this will give you the whole summary, how much was the average capital employed, and what was the average P&L, what were the returns, and what were the loss percentage, win rate, profit factor, and everything comes here as a summary. And if you want to see each individual trade, you can just refer this table below and it will show you all of the 12 trades summary. You get the summary of all of the 12 trades here and you get the detailed view for them right below. So you can see what was the performance of each of them and how did they behave. So we can go ahead accordingly. Please note that this is on the EOD basis. And on intraday basis, for backtesting purposes, we have a feature named Option Simulator. Anyways, we are going to talk about Option Simulator in detail later in the later part of our webinar. So let's move ahead now and see options algorithm. In options algorithm, what we can do is we just select the ticker, its expiry, and we give a target. Say for example, you have a view Say for example, you have a view Nifty can go to 17,700 for example till this expiry. So let's put 17,700 here. Or say you have a range bound view. Nifty can stay between 17,500 or 18,000 till this expiry. So you can put that view. Or if you do not have any view or you consider it being sideways, you can just click on this third option and you can go ahead accordingly and select your risk bias for the strategy you want. Select the directional bias, and in settings you can put the profit target you are expecting, the capital employed, and the liquidity of options. And we can just click on find strategies, and this will give us the whole list of strategies according to the view and the type of strategy we mentioned earlier. And all the whole table will give the list of strategies so that we see what POP we are getting, what maximum profit we are getting, what maximum loss each of the strategy is giving us, so that we can just look at it accordingly and add to analysis each of them, and we can analyze them individually with the help of payoff chart and the details we get for it, like break evens we have. So it gives you the range you are expecting accordingly. So here we have long put butterfly as ranked as 1 here. So this is the OA ranking we give. OA ranking is nothing but an options algorithm ranking. It is a proprietary calculation we take by combining ROI, volatility, and POP. So if you want the sorting by any other form like POP or ROC, you can just select right here. But you can refer OA ranking as well. So for example, if you are finding this strategy according to our temperament, if we are comfortable enough with this strategy, we can just click on add to analysis, this one, and next we can click this one, add to analysis, and this iron condor sale. And after that we can just click on analyze, and all of the strategies we added to analysis shifted right here, and we can see each of them individually here along with the payoff chart as well as the details, say for most importantly the break even points. And if we are interested to track this strategy further, we can just click on add to paper portfolio, and this whole strategy will be saved in paper portfolio automatically, and then you can track it in the live market like how it is performing. So next we can see is options dashboard right here. Here we get the tabular view for all of the IV values of the tickers, along with the call IVs and put IVs. So the motto of putting call IVs and put IVs individually here is to show the supply and demand ratio for each one of them. So as we can see, we can sort it out as well with the IV values individually as well as the IV change. And one more interesting thing we can see in options dashboard is you can put it into the tile view, and you can sort it accordingly and filter it up with liquidity, high IVP, and earnings. The earnings season is coming up, so we can just filter it out according to earnings as well. And one more thing I would like to show you is if you click on any of this, it will give you the suggested option strategies according to the performance it is moving, uh, the movement of it, the trend of it. It will just give you the suggested option strategies accordingly. And we can also see some high IV percentile scripts, and it gives you the suggested option strategies for those as well. So we can definitely give it a try once. Next feature we can see is IV charts. In IV charts, we see the historical volatility 30 days, 10 days, along with implied volatility, along with the IV and RV spread line chart and the IV percentage line chart. So we can track IV of all of the scripts here on EOD basis as well as intraday basis. The next would be volatility surface. This is a 3D representation of IV values. So this is good for calendars, for the ones interested in calendar strategies mostly. So here you can see the IV values of 4 expiries. Say let's take an example of 17,500 strike price. Here we can see the IV for 12th January expiry, 19th January expiry, 25th January expiry, as well as 2nd February expiry. So this can be good for the ones interested in calendar strategies to track all of the IV values for multiple expiries in a single diagram for Nifty, Bank Nifty, and rest of the tickets. Next we see is the strategy charts. In strategy charts, we can create the line chart for the strategies we have. Say, for example, you create a short strangle. You want to see a line chart for that. You can just click on each one of them, add them individually. You get all of the positions right here. You can just click on save strategy here, and you get the line chart for it, which gets updated on the minimum time frame of 5 minutes. On this, we can also put indicators like simple moving average, exponential moving average, and Bollinger Bands for trend checking or analysis purposes here. And we can just add multiple indicators here by changing the colors to avoid the confusion, obviously. And along with that, we can also see the underlying futures line chart for comparison basis. Next we have with here is strategy builder, which we saw earlier. So let's go with the volatility skew. Volatility skew gives a tabular view of volatility skew values, volatility skew change percentage, and volatility skew percentile. So this whole thing gives you the volatility skew data in a single table. So for that we can sort it here as well. As we can see, Bank Nifty has 0.4 volatility skew percentile, and Oro Pharma has the 100 volatility skew percentile, which is the highest in the last 52 weeks. So next we can see here is results calendar, which can be pretty helpful in this earnings season. So we can just click on each date and check which results are to be announced when. And we can just click on that ticker to see the historical declaration of results along with its time. Say, for example, what time they declare their results on. And say, for example, HDFC Bank generally declares its results around 1:30 or 2 o'clock or 3 o'clock. That means, in short, during market hours. So we can plan our moves and strategies accordingly. Next, we see is historical results, the same thing we saw here. It has a tabular view of all the historical dates for the result declaration under historical results. Next, we can see is a open interest menu. In that, we have multiple options to check open interest values and charts. So first of all would be open interest, which gives the bar charts for strike wise information for open interest and change in open interest right here below it, along with the LTP values wala bar chart. So we can see the immediate support and resistance, or how exactly the open interest values are being formed in any specific contract, say weekly or a monthly one as well. Next, we can see here is total open interest and historical total open interest. Let's cover this part, as we are going to cover a major part of it in the next section of our webinar. So let's go upon that later. Now let's see put call OI dynamics. Here what we can do is we can see the put and call performance on the intraday time frame for any selected strike price for that matter, or all of the strike price combined. Say for example, we want to see at the money strikes OI performance. We can add at 18,000 12th January wale contract ka line chart. So here we can see three lines coming up majorly: call open interest, put open interest, and PE minus CE line. Along with that, we have Nifty futures in the background in the blue, as we can see area chart of it. So we know about call open interest, we know about put open interest, but this PE minus CE line is something unique we have come up with, which shows the difference between put open interest and call open interest. Say for example, as we can see here, call open interest is also falling, put open interest is also falling. But in order to know which one of them is falling more or which one of them is rising more, for that we have this purple line. As we can see here, this line is rising up. That means call open interest is falling more comparatively to put open interest. So instead of just calculating it manually, we have just given you a line chart to check the trend of the open interest behaving in intraday time frame. So this is total open interest line chart, and this is change in open interest line chart. So we can track it over here. Next thing is open interest charts. Here we can see the line charts for any of the strikes or options selected along with their Greeks value as well. So sometimes if we are interested in how the theta values of each option are behaving, we can just plot it right here and we can see how those Greeks are behaving, and IV and volume as well for that matter. So we suggest you to plot not more than 3 or 2 at a time, because this scaling gets a bit complicated. So to avoid that, we can just plot maximum 2 at a time in a chart, or we can just remove the earlier one and plot a new one if we want, to avoid this scaling complexity. That's it, nothing much. And next would be multi-open interest charts. Here we can plot multiple line charts for multiple. We can plot open interest line charts for multiple strike prices here. So as you can see, we have plotted the line charts for call open interest and put open interest for 18,000 call of 12th January contract. So as it is a call and put of same strike price, it is by default giving the PCR value for that as well. So we can also put the price charts for them, each of them individually. Say for example, if you want to see how the prices are moving along with their open interest move, so we can track it in this multi OI charts. And if we want to see combined charts, say for example, we want to see a straddle chart of it. Say for example, in this one, what we saw is individual line charts for each one of them, individual open interest chart along with the individual price chart of them. So in combination charts, we provide individual line charts for open interest, but a combined line chart for its price, like the one we saw in strategy charts. But here we can see along with its open interest change. So this can be helpful in tracking those kind of analysis, performing those kind of analysis. Next we see is the PCR here. Here we can plot line charts for PCR, WPCR, and their moving averages to check the performance of any underlying right here on EOD time frame as well as intraday time frame. So next we see is the straddle charts. So this is something useful, you can say. Here it takes by default at the money strike price chart. Two charts you can see. One is the price chart, and the one besides it is the OI chart. So what this gives is by default, it takes at the money strike and it plots it right here. Along with that, below it, it gives one strike above it and a strike below it. So you can track at the money along with one in the money and one out. Right. So we can track it here, and if the market moves, say for example, now it is 18,000 and at some time it shifts to 18,200, then in live market only this strike price gets updated. Or if we want to see any other strike, we can just select it right here, and we get the straddle chart for that. The straddle chart along with the Nifty futures performance right here. So we got a question like, can we have multiple windows in multiple open interest charts? Okay, so in multiple open interest charts, we have a feature you can say of watch list. So what we can do is we can create multiple instances. Say for example, let's create one instance of 18,000 call put of weekly expiry, another instance of 18,000 call put again, but for the monthly expiry, this one here. So we see this is a kind of a watch list we can create. So multiple uh, strikes or multiple instances we can see here, and we can just save it up, and when we come the next time to open this feature, we can see this whole watch list saved here. So we can toggle around it one by one, or you can open multiple of them in multiple tabs of your browser as well. I hope that answers the question, and this could be. Next thing we can see is option chain here. In option chain, we can see the Greeks values along with the LTP, IV, volume, OI, and OIG. So for the ones observing Greeks values and taking strategies according to that. You can definitely use this advanced option chain right here to track them as well. So this is available for the current expiry and all of the next expiry is available here, and for Nifty, Bank Nifty, and all of the stocks in FNO segment. Next is options activity. So in options activity, this gives you a tabular view of the data we saw in open interest bar charts. So this gives it just filters out everything and gives you the maximum open interest wala strike price for call as well as for put, the maximum open interest strike price, the maximum addition wala strike price, and the maximum unwinding wala strike price. So we can just see all of that in a single table. So this gives you for a monthly contract as well as a weekly contract for Nifty and Bank Nifty. The W indicates weekly. So these two, these one and this one are weekly contracts, and this one and this one are monthly contracts. So we can see the data accordingly, and if we just trade using support and resistances kind of setup, then we can definitely use this feature and refer the option stock 16 video for to apply this kind of to how to use this kind of data practically in your trading. So along with this, we give FII DII data as well for cash market as well as derivatives in the form of charts as well as in the tabular form as well. Like daily, how much was the futures volume, how much was short, how much was long of it, how much was call long, call shorts, put longs, put shorts, and net of it and change of it from the previous day. So this whole is the data, and this right here we can see is the line chart for that data. So that will be it. That will be it for the features of Opstra. Now let's hand over to AP sir for total open interest and the strategy.
Before that, let me just take you to the paid and free features.
Okay. Right. Okay. So let's go with this thing here. We can see the bifurcation for all of the features available under basic plan and the pro plan in this pricing section. For Opstra Definedge, the existing Opstra, and for new Opstra, we can always refer definedgesecurities.com. There we can see all of the premium features and basic features on it on for all of the products for that matter, for Opstra or say TradePoint and Zone as well. So here we can see in basic plan we provide options portfolio, in that we can say maximum of 2 trades in total, and options dashboard, IV charts in the EOD format, not the intraday ones, the strategy builder where we can just create our strategies and analyze them along with the payoff chart and all of the details along with it, like break evens, POP, maximum profit, maximum loss, and everything like that. And results calendar, historical results, open interest bar charts we saw, PCR chart we saw, the PCR, WPCR, and their moving averages, that one, and the option chain with Greeks, and all of the futures features just except this intraday one. And the data update in the basic plan is 15 minutes, whereas in the premium plan data is live update, which refers to the 1 minute data update along with a few seconds delay for Greeks calculation. So that will be it for the basic plan and the premium.
So okay, now let's get to a specific strategy. So in that specific strategy, it is under open interest. It is called total open interest. So what happens is total open interest is a feature which has been introduced in TradePoint as well as Opstra. And total open interest is what is total open interest? Total open interest, you have to select a strike price, which is the base strike price. And typically we recommend to select the at the money value at around 9:30 in the morning. So let's say Nifty is at 18,100 at 9:30 a.m. spot price, not futures, spot price. Then select 18,100 here. So just as an example, I'm showing here, I'm selecting 18,100, and So Nifty 12th January expiry 18,100. And here it says number of OTM strikes. Now this is something which you need to understand what it means. It's very easy to just read 6, but what is 6? So here we have 18,100 as the base strike price, then 6 OTM strikes, which means 6 OTM which is above, and 6 for the calls which are OTM, and as well as 6 ITM which means below for the call. And same thing for the puts, 6 ITM puts and 6 OTM. When I say ITM, it is in the money, and OTM is out of the money. So 6 strike price lower, 6 strike price higher for call as well as put. So that makes it, the base has 18,100 call plus put, 6 call higher, 6 puts higher, 6 call lower, 6 puts lower. That is 24 plus 2, 26. So this is a tick just to select 50 strike price also, which you need to select. So what this means is it looks at 26 symbols, which is 18,100 call and put, 18,150 call and put, 18,200 call and put, like this for 6 higher, and 18,050 call and put, 18,000 call and put, 17,950 call and put, like that 6 lower. So it looks at 26 strikes on a continuous real-time basis, and it looks at the open interest of each strike price of each call and put. It also looks at the change of the open interest of each call and each put. And finally, what appears on the screen is just one single line. I'll hide Nifty over here. I'll also hide the moving averages. So this is the line which is plotted, which is called TOI. So after all this selection of 6 strike prices, which meant 26 symbols, finally what it does is, okay, let me add it over here. So this is 18,100, and here you can look at it on 5 minutes or 15 minutes or 30 minutes, but we recommend 5 or 15 only. And what you can see here is right from 29 December to 2nd, around that period, this has been on the decline. So there is one small problem here. Based on the simple movement of the line, it might be difficult to understand the trend. Okay, here you can see it is very easy to understand that it is going down. So this is a downtrend. And what it means is, whatever is the direction of the TOI line, that is the trend of Nifty. As simple as that. So when this TOI line is going down, that means Nifty is going down. And if you want to superimpose Nifty on this, you can add Nifty over here. You get the chart of Nifty, line chart, area chart. Then there are two moving averages we have added, 10 and 30. They are nothing but just to act as a guide. Like I said, just looking at one single line might be a bit confusing sometimes, or like over here. But when you add moving averages, they help you in identifying what is the actual trend. So whenever the TOI line is below the two moving averages, Nifty is weak. Whenever the TOI line is above the moving averages, Nifty is strong. Same thing can be done on any stocks. For example, let me select Reliance. By default, it accepts the current at the money. So let's select that only. Only difference is in Nifty or Bank Nifty, you can select 6, because in Nifty or Bank Nifty, even up to 6 symbols out of the money or in the money are liquid, whereas in stocks they are not liquid to that extent. So that's why you select only 2, which appears by default. You don't have to change anything. When you select a stock, this becomes 2 automatically. And let's say add TOI. So here you have Reliance TOI. So that is also very clear. If you want to add the price, this is the price. So this is something which is very interesting. Now here you can see from 28th December to, let's say, about 30th, for those 2-3 days, Reliance price was going up from 25.20, it went up all the way to 25.80, about 60-70 points rise. But the TOI was still coming down. That meant that the put writers were not giving support to the stock, which also means that the stock, though the price was rising, it is not going to remain bullish. I mean, the bullishness is not going to sustain. So that's why you have to be cautious whenever you see that the price is going up, but this TOI line is coming down. That means you need to be cautious if you are long. And then it went sideways at the top around 25.70, 25.80, and then it started coming down, and it came all the way down to 25.20 after 3 days. So this acts as a very good guide to understand what the stock is likely to do in the next couple of days. Of course, TOI is only for short term, And I mean, for options traders, in fact, we are going to explain a couple of strategies after this. So that is very helpful in identifying what trend you should identify and what is the strategy you should employ. So coming back to Nifty, for example, here Nifty, if I select the monthly expiry, uh, these are some strike price which I have already saved since last few days. You can always, I mean, whenever you select something, it gets saved here in this list, and you can access it the next day also. So let's say I select 25th Jan Nifty, and for monthly, it is always better to select the round figure because monthly options, since the expiry is sometimes 2 or 3 weeks away, the 50s strike prices are a bit illiquid. So better to select the round figure like 17,900 or 18,000. And if you add the TOI, so this is 17,900 TOI. Of course, in the last couple of days, that might act as a slightly misleading because that time Nifty was not at 17,900. It was in fact 18,200. So don't look at this. Now the current TOI, it was going down yesterday. This day is yesterday, which is the 6th January. And towards the end, it gave a exit signal. This means that Nifty is likely to go up. This, of course, this is not a hard and fast thing that Nifty will become bullish, Nifty will become bearish, but this is a sign that you need to be careful with your shorts if you have any shorts in Nifty. So that is one indication. And based on this, for example, if I go and select 18,300, which was the level of Nifty at the start of this expiry, so I'm selecting 18,300. So around the beginning of this expiry, which is around the end of November or start of December, the TOI was always coming down. If you see here, even if you go to 15 minutes, it is still showing a downtrend, right? So Nifty was toggling, in fact, it was sideways between 18,100 and 18,300, but the TOI was continuously coming down. That means if you have any long positions, you need to be careful, as simple as that. So coming to one strategy, which is a positional strategy based on this TOI, let me go back to strategy charts. So here we are selecting. Okay, now I'll hand it over to Krishna, who will explain this.
Okay, so as we can see in this has given a very signal right here at say start of January only. So we can open a strategy chart to check the performance of any strategy we deploy according to that analysis. So as we see, Nifty was around 18,300 at that time. So let's short 18,300 wala monthly call.
Yeah, I repeat the strategy again. Whenever, Krishna explained, we got a bearish signal near 18,300 Nifty. So the trade is a credit spread, call credit spread, where you short at the money call, which is 18,300, and also go long in out of the money call, which is typically 300 points. Let's say, so in this case, it will be 18,600. Now, why going long in the out of the money is one is to define your risk. We will show it in the strategy builder chart how the risk gets defined. That is number one. And number two is you don't get exposed to any overnight risk in case there is a big gap up and for whatever reasons. For example, yesterday US market closed very strongly, so we might have a gap up tomorrow. I mean Monday. So in case Nifty just keeps going up, your risk is defined. That is number one. Number two is margin required. If you go short in a naked call, uh, apart from the risk involved, you also have a higher margin to pay, sometimes as high as 1.5 lakhs or even more. Plus, you have to keep some additional margin for cushion, any M2M. So when you buy this out of the money call, that margin comes down from 1.3, 1.5 lakhs to as low as 30 to 35,000 rupees for both the lots together. So once you do that, the risk gets defined. Of course, once you also buy the OTM call, your profit also gets capped. Now, in this case, like I said here, if you take a trade around here when the Nifty gave a sell signal, it was around minus 105, minus 110, which means that that was a difference between the call and the, I mean, the 18,300 call and 18,600 call. That difference was 105 to 110. and now that difference has come down to 80, 50, which also means that when you took the trade around the start of this expiry, you, let's say, shorted it at minus 110. Now it is minus 50, which means you have a profit of around 60 points, and that is on one lot. So it is about 3,000 rupees. So it might look very small for someone who trades long options, but it is a very safe strategy. And believe me, in fact, we will show up old month from the backtesting point of view, where we have historical TOI. So we have selected one month, December 2021, where it was quite volatile in the initial stage. And how does that strategy behave that time? So the aim is to capture 100 points in a month. So in this case, we have already captured 50 points, and even if let's say Nifty goes up tomorrow, since we are short in 18,300 call, that is not going to rise much. So yes, this will come down, but it is not going to come down drastically because Nifty has already moved down by 400 points. So this is not going to change very drastically. And then let's say if the Nifty TOI gives a buy signal, you can always enter the put spread. So whenever Nifty gives a bearish signal based on the monthly TOI, enter a call credit spread. Whenever Nifty gives a bullish signal based on TOI, enter a put credit spread. So in this case, the example was call credit spread. Of course, like I said, we have an old example which we will show, where both the trades were there in that month. So of course, there are whipsaws also, no doubt. But here the aim is to capture only about 100-120 points in a month. That is number one. Number two, here there is no need to act fast. Even if you have, let's say, a signal on TOI, in case you are trading futures, you have to act very fast because even a slippage of 10-15 points matters a lot. Whereas here, anything up to even 50-70 points doesn't matter for the spread because both the legs are moving. So the spread doesn't change much intraday within 5-10 minutes. So let's say instead of minus 106, you will get it at minus 110 or something like that, or minus 102, even if it goes in your favor. So that law in terms of what the technical word is slippage, that slippage is not much in spreads. So you have enough time. The bottom line is you have enough time to think about the trade, plot it on this chart, see what the spread chart is saying, see what the TOI is saying, see what Nifty futures chart is saying. In this case, let's plot Nifty on this. So it was always coming down from here, from 3rd January. So here, since Nifty is going up, maybe you can avoid, and once Nifty starts coming down, you can take this trade. And once this trade goes in your favor by about 100, 150 or 200 points, then you are quite safe because that call premium has gone down so much that it is not going to rise immediately, because now that call which was 18,300 is almost 400 points out of the money. So in terms of talking of the Greeks, the delta will be very low. So it is not going to rise very fast. So you have enough time, even if on Monday Nifty reverses to bullish, for example, and TOI gives a buy signal on Nifty on Monday, let's say after 9:30, 9:45, whatever. You have enough time to exit this. And of course, there will be loss in profit. There is no trade which is, you can catch both the extremes. But like I said, the aim is to catch 100. Sometimes in a good month, you might be able to catch even 150 points. Now, if you just do a simple calculation, what is 100 points? 100 points on one lot is 5,000 rupees, right? And 5,000 rupees, of course, don't calculate it on the basis of 30,000 rupees. That is a very wrong calculation. That is a traded capital. But let's say you allocate 1 or 1.5 lakh rupees for one spread. Even if we take 1 lakh rupees, 5,000 rupees on 1 lakh, that is 5%. Now, this is a very safe strategy where you don't need to act immediately within the next couple of minutes. You can act after 10-15 minutes. And after that, you have to just track the monthly TOI and ride it. Whenever there is a reversal, the TOI will, for example, I mean, what do I mean by reversal? Let's say I have already plotted, I'll go back to this TOI chart, and I have already selected 17,900. So here, if let's say Nifty reverses on Monday, this TOI will give you a buy signal. And then you can go to the strategy, in this strategy chart, select 17,900. Again, this is on monthly options. This is not a trade on weekly, since this is positional. So 17,900 will be a sell added to strategy, and 17,600 put will be monthly buy Add that to the strategy over here, then save this strategy, and this is the strategy which we have plotted. Right now it is going down, which means if you had taken this strategy for whatever reasons, it would have given you a loss, because from here -50 it has come down all the way to -100. But let's say it gives a buy tomorrow, Nifty. So this will start rising. And the best part in this kind of strategy is whenever Nifty gives a reversal, though you have a risk defined strategy like what we will show in the strategy builder, here you have a clear cut stop loss. So if this strategy comes at, let's say, -90 or something on Monday, this -105 or let's say -110 is your stop loss. So in case Nifty suddenly keeps, even if it gaps up and TOI gives a buy, but after that sometime, maybe a couple of hours or maybe on Monday, Tuesday, Nifty starts coming down. So your risk is defined. There are two ways of defining risk, that either the total risk or the risk as per the chart. So as per the chart, you have only about 20-25 points risk, and only if this goes below 105 or 110, you have to exit that. And of course, I can assure you that even before that, the TOI will tell you that Nifty is becoming bearish. So in fact, here only somewhere, you don't even have to wait for this here. If TOI becomes bearish, you have to exit this and then look for a call spread. So this is one strategy for positional. And now if okay,
Sir, along with we have capped loss. That means we have defined risk as well as we have upper profit as well. We have cap on a profit as well. So along with the stop loss, as you mentioned, we have a stop loss. Say of in the last strategy we had 110 ka stop loss, 25. About 25 points, right? So can we just consider it for?
no, that is a very, in fact, like I said, this is already a conservative way of trading Nifty on a positional basis. If you have a profit target of only as per the one risk, 1 hour, like they say, that is even making it even more conservative. Why not ride it till it goes? Who knows? Maybe that -110 might become zero, and you will get the complete your monthly target of 100 points in one trade itself. There is no need to take any other trade. So there is no need to book especially when Nifty trend is continuing. There is no need to book. You can just trail it.
So we can just wait till the time or we can just
Yeah, or till Nifty reverses.
okay, yeah.
So this is one positional method. Of course, we will show the old backtest from December. But before that, there is another. For example, here in total open interest, we got a sell signal yesterday, even at 18,100 on a weekly. Now, this is for weekly options. So on weekly options, here in the morning yesterday, we got a sell signal. This is 6th January, and here we have selected 12th January, 18,100. Yeah, here, 12th January. So go to strategy builder again. Sorry, strategy charts. The previous strategy was for monthly conservative trades, and here this is an intraday slightly aggressive trade. So select 18,100 put. Again, this will be weekly. This is not monthly because we are talking about intraday trades. And add it to strategy. We are talking about only one single naked trade, and save this. And on intraday basis, and just select one day. You don't have to select anything else because this is an intraday strategy. You can select line or even candlestick. This is the chart of that 18,100 put. And the easiest way is add the VWAP. So whenever the VWAP gives, whenever the price or the premium goes above VWAP, now here this is not just the premium going above VWAP. Here you have to keep it in mind that TOI is bearish. So the basic hint, the first hint comes from the TOI that is bearish, and that's why start looking for a trade in the put. So the easiest method is plot a 5-minute, in fact, plot a 5-minute chart also. That is also okay. This is a 5-minute chart of 18,100 put of yesterday, and either buy it above the morning high or maybe above the VWAP over here. And here the risk is the morning low, which was around 120, and let's say your buying was above 150. So the risk is only 30-35 points. And what you need to do in options buying is you always buy at least 2 lots. Never buy only 1 lot. At least 2 lots. And since the risk is 30, book 1 lot at whenever the price reaches, rises by 1 hour, that is another 30 rupees. So if you bought it at 150, whenever it goes to 180, book that 1 lot or half the position, which means your trade becomes free. Even after that, if it goes down and this stop loss gets hit, you're not going to lose in that trade. And then write the second lot or the second half till the time you are comfortable, or maybe based on price action, or whatever way. But this is a good intraday strategy which complements the monthly positional strategy, because sometimes even if there is a intraday reversal, a small reversal, maybe a spike or something, you can catch it based on weekly KOI and weekly options, and that monthly strategy can still continue because that has a wider stop loss and it is a safer and a slower strategy. This is for, just to give an analogy, that is like a one-day international. This is like a T20. So whoever has enough screen time intraday, they can use this. Whoever doesn't have screen time, they can use that. Whoever has both can use both. So it is as simple as that. So now I'll ask Krishna to go through the previous month of December 2021. We explained these two strategies live, current based on the current levels. But I'll ask him to take you back to December 2021.
Okay, so let's see how this strategy performed historically. Say, for example, we take an example of December 2021 wala expiry. So let's go in option simulator. We have Nifty here. We take December 2021. The expiry monthly was 30 December. And let's go with the start date. Say, for example, this after the expiry. So the November wala contract expired on 25th of November. So this contract got active. Say it got current contract on 26th of November. So we can start looking at signals right from 26th of November. So as we see, Nifty price is going on as 17,300. So let's open up historical TOI. Let's select 30 December, and as at the money we can go with 17,300 for that time, and 6 out of the money strikes as default. So let's add it and let's see how it performed at that time. So it was 26th of November. We can also zoom it like this, and as on 26th of November we can see it gave a sell around 1040, we can say. So till the time it went to 1040, the Nifty futures has moved to 17,150. So sir, we need to go with 17,300 or 17,100 or 150.
Where?
Yeah, as we see, the start of the day was at 17,300. But till the time TOI gave the signal.
Yeah, then you have to take at the money, so it will be 17,100.
17,100. Okay. So let's open up 17,100 wala TOI and add it here. Let's see when that has given us the signal. So on 26th of November, if we see, it has given a sell signal around, okay, on 26th of November, it has given the sell signal around same time, almost 11:35. We can see here. So what we can do is we can move to approximately 11:35 and we can just go with a call credit spread. So here at the money, as we can see, is 17,200. Let's take rounded off figure of 17,200. 17,200 call short, and as a 300 point convention, let's go with 17,500 call long. So we can see the payoff chart for that selected strategy. As it is a call credit spread, we see this is the payoff.
Now this is the payoff chart as per, if you hold this trade till expiry. So when I said it has a defined risk, so this is the maximum loss you are going to make even if you do nothing with this, and even if Nifty goes against you. But we have a much, this is a wide stop loss coming to think of it, but you have a much refined stop loss if you look at the TOI and the chart of the spread on the strategy charts.
Okay, so if we see the trend shift, then we can refer our price action wala stop loss or TOI wala stop loss, right? Okay. So as we can see, we got the entry around 11:35 for this call credit spread on 26th of November for the expiry of 30 December. So on historical TOI, if we zoom out a bit and we see here, so the convention is to look at the price movement of 200 point as we are currently observing the TOI of 17,100. So we need to change the strike according to the market movement. So as the market moves for say 200 points, then we need to shift our strike price from 17,200 to say 16,900 if it is moving downwards, or 17,300 if it is moving upwards. Or the other case would be on the next day. This was the entry was on 26th of November. So we'll look at the opening for 27th of November again, and we can just select the strike price according to at the money of market opening at that time. So we can just simulate it, as this is the positional. No need to go with 5 minutes. We can move with 30 minutes as well to check to track the price movements of underlying.
This profit goes to 280. One more day, this profit goes to minus. So yeah.
As this went to minus because as we can see on TOI as well, this on 6th of December, this is 30th of November yet. So on 30th of November, we can see that it went up for some time. This TOI line was twinkling around its moving averages. So we can wait for some time for its confirmation. So as our risk is already defined.
That is exactly what I said. For Nifty, if you are trading Nifty futures, you need to take action immediately because you might get a bit worried that it is moving 10, 15, 20 points against you. But in this case of spread, it doesn't move so much. You have enough time to wait and then.
Okay, so the advantage of selecting spread over futures is we get some time cushion to just have the confirmation of that trend, right? So we can just wait for it to give the confirmation as it is just twinkling around its moving averages. So let's reset it and let's see when does it give the opposite signal. So as we can see in this TOI, it has started rising and giving the opposite signal, or we can say the exit signal, around 8th of December, right? So in this case, what we can do is we can just start moving till 8th of December day by day. So we see the loss is there, bare minimum say 800, and now we can see as on 6th of December, this position has turned in our favor. The loss, the minimum loss, has been transformed into some profit as we move ahead. So let's go to 8th of December, where this TOI gave us the exit signal. Obviously, this was a whipsaw wala time where we see it came up for a bit where we could have exited the trade.
Yeah, for those wondering what is a whipsaw, whipsaw means the trade goes against you, but there is no trading system in the world which will not or never give a whipsaw. So in this case, you, like I said, the loss is much lesser in the spread than Nifty futures. So your loss is less. So whenever there is a whipsaw, you have to accept and exit that trade and reverse it as per the new trend. But the advantage is whenever you get a long trend, like for example, here in this case, for the last 1 week, Nifty is coming down. So from 18,300, it has come all the way down to 17,900, and that spread has already given 60 points. So you need to take every trade, even if you, let's say, take a hit on 3 consecutive whipsaws, you must take the fourth trade also. So because the loss in this kind of trade is not much, maybe just 10, 20 or 25 points, which is hardly anything. But when you get a good trade, you can get as high as 50, 80 or even 100 points. For example, if Nifty keeps going down in spite of the US market, if it goes to 17,500, that 18,300 spread will go to maybe 20 or 30. So your 100 points is done in that one trade itself. So the key is you have to take care of. I mean, you have to take every trade which comes, and don't bother about whipsaws. There will. I mean, it is very clear. Anyone who follows the stock market, there is no way you can have a trend every single day of the month. There is going to be a whipsaw phase. There is going to be a sudden spike, sudden fall, or maybe sideways. The advantage in this credit spread is even if market goes sideways, since you have at the money call short, you are still going to make money because the time value will act, and the premium will still reduce. So that is the advantage of having a credit spread instead of a debit spread.
So Greek terms, the theta is in favor of us. Right. So along with this exit signal that TOI gave, we can also follow our stop loss system, right?
Yeah.
The price action based stop loss system.
Absolutely.
So if we see the stop loss could have been around, but there is a less chance it would have been hit, because as we can see around the next day only, like on 13 December at start of the day itself, we can see it has started reversing again. It has starting to move in our favor again. So maybe we can continue with this thing and resume the simulation to the further time frame. Like it has moved, the market went all the way up to say 17 1. I'm so sorry. Here we are seeing this 8th of December. It went up to 17,480 or say 17,500 as well. So we can just change our TOI and we can move forward with that. But as we see, the TOI started coming down again. So we can continue with this spread as well. So as we see, as we move ahead, the loss is reducing, and the position may start coming into our favor. As we see on 17th of December at around 135, we see that this position of ours has become profitable. So as sir mentioned, we need not worry much about this kind of trade because it has a capped loss of the mentioned uh, debit, right? So we can move ahead with this as well till the expiry or till the signal comes up. So let's go till expiry day by day and let's see how the result comes up at the end. So we have reached the expiry and we can see around 135, or let's go to 3 o'clock to square it off. We can see instead of along with all of the whipsaws, we gain here around 6.8k with all of those whipsaws. Even if we sustain this trade and we continue with this till the expiry, we got 6.8k returns from this kind of strategy.
Yeah, so this is a broad strategy, which is, like I said, conservative, but still gives good returns. I mean, when I said 100 points, of course, there will be some whipsaws of maybe 20, 30 points. So even if you talk about 70 points net in a month, that is still about 3%. And 3% every month. Of course, you have to be active at least a couple of times in a day to see if there is any change in the trend. You don't need to be continuously in front of the screen. Only when, let's say, the TOI gives a reversal, you need to check what is the TOI, what is the trend of Nifty, what is the strategy chart, and then take a trade, and then just ride it. So that way, this is for, in a way, for passive traders, conservative strategy, risk defined, and it helps in the long run, because if you keep doing it, it is definitely going to reward you.
Right, and as we see, coincidence here is we started the trade when it was around say 17,100, 150, right? And now also till expiry, it is expiring around 17,200. So we can say there is more or less no displacement in it. So this that thing also gave us a profit due to theta decay for at the money wala strike.
Yeah, so this is what we wanted to explain today. So in case you have any questions, you are free to ask them now.
Okay, let's take some of the questions. Yes, option simulator is included under premium plan and not available under the basic plan. So let's go through it again. Options backtesting, option simulator, options algorithm. These three are available under premium plan only, and options dashboard is obviously there for basic plan as well, but with a 15-minute data update.
Yeah, you have to always look at Nifty spot for the TOI. To select the strike price for DOI, you have to select Nifty. I mean, you have to look at the Nifty spot price and select at the money of the Nifty spot at around 9:30 in the morning, and then plot that DOI.
Okay, so to be clear again, we check at 9:30 the at the money strike of spot, and we continue with it till the time the day changes, or obviously there is a movement of around 200 points in the underlying. Okay, so as soon as the 200 points move comes up, we change the strike price according to the current at the money.
Yes. Okay, so I think we have covered what we wanted to and answered the questions also. In case you have any further questions, you are free to write to us at info@definedge.com or to me at ap@definedge.com, or you can tweet to me at ap_Pune. And we hope you. Okay, one more question has come. In monthly chart also, what can be the accuracy that can be expected? Accuracy in the sense, I have not understood, because if the TOI is bullish, like I said, you have to just write it. There is a chance that it becomes bearish. Sometimes it can happen the same day. But in this kind of a trade where you have a spread, the stop loss, I mean, the loss which you face will never be more than 20-30 points. So in terms of accuracy, it is impossible to tell the accuracy, because here the key is you have to take every trade, number one. And how market will behave, no one knows. No one can say market will go up by 200 points, come down by 300 points. That is impossible to predict. That's why I said you have to take every trade, even if there are a couple of whipsaws. Okay, so we come to the end of the webinar. We hope you enjoyed it. And like I said, if you want to ask any more questions, you can email us at info@definedge.com or to me at ap@definedge.com. Thank you and bye-bye.